Good evening, everyone. Oh, Hello, can you hear me? Hello? All right, so I think good evening, everyone. I hope now I can be heard, right? You can hear me? I hope you can hear me now. All right, so nice meeting you once again. So, as I said, we are going to be talking about an important message, or you are going to be talking about an important thing that's going to help us to make money for the upcoming week. So, those who are active, you need to stay along for us to close. You get it? Because we are going to talk about an important message, something that is going to help us to make money for the upcoming week. So, first of all, we can't proceed or we can't start the meeting without introducing ourselves. You need to introduce ourselves so that when you see each and everyone maybe in town, you can either what mentions the person's name. So without much ado, let's introduce ourselves. So you just type in where you are listening from. So you type in where you are listening from and your name and where you are listening from. I think that's best. So I want to know where most of my audience are coming from. So you are coming from Ashama. All right. So Joseph is coming from Ashama. You have Milia Lucy from Kenya. You have Ziapo from Tetevi Daniel from Ziapo. So where are you? So kindly type in where you are coming from. Are you all coming from? Are you all in Africa? Or are you having some people outside Africa? So kindly type in your location. Let us know your name and your location so that when we see you in town, we're able to call you by your name. We will be able to call you by your name. So where are you listening from? Terry from Kenya. All right. So nice meeting you, Terry. Fred, I'm from Ghana, Nairobi, Kenya. All right. All right. All right. All right. All right. So we having Obadiah from Kenya. You have Yaluk from Kenya. You're having a lot of people. So most of my audience are coming from Kenya. You're having a lot of people coming from Kenya. All right. So you're having Ghanaians too inside. You're having Ghanaians too. Some people coming from Ghana. All right. So okay. So we're having Letabio Kwashi. Okay. So my name is Pakwisi. I'm coming from Ghana. I'm also coming from Ghana. So I've traded the forex market for almost 6 years, and I've been able to achieve a little success. You get it? The market is not easy, so I've been able to achieve some success in the game. So that's why you need to listen to me because I'm having a lot of experience in this game. You get it? I started trading in the year 2018. I took it. So by then I was in school by then, so I took it seriously. I was taking it seriously, but because of classes and other stuff, I wasn't getting time to concentrate on it fully. But I took it full time at the in the year 2020. Okay, so I've been active in the forex market for almost 5 years, so I have a lot of experience and I've been able to achieve profit. And in this game, for you to be able to know whether this person is good or this person is good, this person is a good trader or this person is a bad trader, the only thing that is going to help you to be able to know is what is for you to, if the person is having some track record. Okay, if the person is having a track record. So for me, record. I'm having a track record. You get it? I've been able to pass a proprietary firm account. I've been able to grow the account in the extent of receiving payout. So when anything that I'm going to say, if you pay attention to anything that I'm going to say, I think it can also help you. And I know a lot of people over here are either beginners or are also struggling to make make it in the forex market. And one thing I want to tell you is this game is a simple or it's an easy way to make money in the forex market. It's a simple way to make money in this market. But one thing you have to notice, what it is not easy at as you are looking at. You get it? It's a simple way to make a lot of money, but it is not easy. So you need a lot of knowledge, you need a lot of what experience for you to be able to make it in the forex market. And for me, I've been able to crack the code. I've been able to see what works for me. So I'm here to share with you the things that I did, that I was able to achieve the success that I'm talking about. So if you pay attention to whatever I'm going to say, I think it's going to help you in your journey. So today, normally I've been saying it, you are going to be having weekly webinars. I'm here to share experience, because when I started trading, it was very difficult to find someone who is dedicated, someone who is committed to be able to be sharing knowledge to you weekly, every week, to be sharing knowledge with you. Even to get close to someone, to get someone that you are going to contact every day or every week was very difficult. So one thing that I decided to be doing is what, when I get this concept, when I am able to crack the code, what I'm going to be doing is what, I'm going to be sharing the knowledge to people who are also struggling, because you're having a lot of people who are struggling. Even most of the people claim the self-acclaimed gurus don't even know, they don't even trade life. How many people have you witnessed trading life? Like, I've been able to trade life consistently for more than 2 to 3 months now. Okay, so this proves to you that I know whatever I'm talking about, and I've been making winning trades. I've been making a lot of winning trades. I've been making people money on the live stream. People have been making money from my free signal that I've been sharing on the live stream. So this tells you, or this should tell you, that what, I have a lot of experience in whatever I'm going to talk about. So you need to pay attention to whatever I'm going to say. So within this week, so mostly the weekly webinars are purposely for the things that I discover within the week. So within last week, I was able to discover something that was causing a lot of damages to people's accounts. Okay, so if you are a beginner, most of the times when they say something to you, you normally overlook it, unless maybe you start witnessing it or you start experiencing it before you pay attention to those things. So this week I witnessed something that I want to share with you. I know a lot of people are not having knowledge in those things. Okay, so one thing I'm going to talk about, the I'm going to be talking about I'm going to be talking about the I'm going to be talking about the fundamentals of forex. Okay, the fundamentals, what you need to understand about this game. And I know a lot of people are hiding these things from you. I'm going to be talking about the things, that the hidden truths, okay, that you need to understand about this game. I'm not going to sugarcoat anything to you. You get it? When it comes to trading and investing, you need to understand these things before you be able to make a lot of money. So those who are making a lot of money from this game understands these rules. That's why they are making a lot of money. But most beginners are naive. Most beginners are having less knowledge. They have less knowledge about how this thing works. So in this video or in this webinar, what I'm going to do is what, I'm going to share the hidden truth that is causing a lot of people not to see progress. So sometimes you will be seeing, I've witnessed this thing before. Okay, I'm a testimony to this thing. So sometimes what happens is what, when you can make money for some time, maybe you can be making money for a week, you can be making money for sometimes 3 weeks, consistently you'll be making profit. But you see, with one winning trade, everything will be wiped away. Okay, everything will be wiped away. So in this video, I'm going to be talking about the things that you need to do, the things that you need to understand about this game. So those who are making a lot of money in this game, their understanding. Okay, we are going to dive deep into their understanding, okay, on how they are able to make a lot of money from this game. Okay, so that when you lose one trade, it's not going to wipe everything that you've made. So I'm going to be talking about the hidden truth, the things that you are not aware of. Okay, so if you know you have been losing a lot of money, you have been winning consistently for some times, and one winning trade wipe everything away, then you need to stay tuned. You need to stay to the end of this video, because at the end of this video, everything will start making sense to you. Everything will start making clear. Everything will start making sense to you if you don't understand Okay, so let's dive deep to what I'm about to say. So I've already introduced myself. I said my name is Pakwisi. I'm coming from Ghana. I've traded the forex market for almost 6 years. Okay, so I'm having a lot of experience. I'm having a lot of knowledge about how this game is being played. You get it. So in this webinar, I'm going to show you how you'll be able to what come out successfully, even if you're having a losing streak. How you are not going to blow your account, because when a lot one thing that happens is what happens to a lot of people's account is what when they start getting when they start maybe when they start seeing progress in their account, one losing trade will wipe everything away. One winning trade is going to wipe everything away. So in this video, I'm going to show you the hidden truths, the things that you need to understand for you to see consistency on your account. As I'm saying, I'm a testimony of that. When I started, I would trade accounts. You get it? If I'm having $100 account, I would trade accounts, grow it to some time, to some extent, and one losing trade will wipe everything that I've made within the week. If I've been having maybe winning trades within the week, one losing trade is going to wipe everything away, and my account is going to be gone. Okay, so that was when I started. Okay, by with a lot of testing, with a lot of testing, I was able to discover why why one trade mostly wipe everything away. So let's dive deep into what I have for you tonight. So tonight, this is what we are going to be talking about. We are going to be talking about risks to reward. We are going to be talking about risks to reward. Okay, so tonight we are going to be talking about this important topic. We are going to be talking about risks to reward. A lot of people don't understand this principle. Okay, so for you to make it in the forex market, you need to understand this thing. You need to make sure you understand this thing. You get it? For you to make it in the forex market, you need to make sure you are applying this principle in your trading journey. Okay, so what does it mean about risk to reward? I know a lot of you have been hearing about risk to reward, risk to reward. Okay, you've been hearing from other traders. If you are a beginner, I know maybe you have been hearing it from your social influencer. You have been hearing it from your online mentor. He's talking about risk to reward, risk to reward. So what does it mean by what risk to reward? I know you guys have been hearing it, but in this video, I'm going to talk about the I'm going to talk about it in different way that you are going to understand it well. Okay. So risk to reward is not only about you having what 1 to 5, or you having risking one and what getting in returns like 5. It's not only about that. Okay, so in this video or in this webinar, what I'm going to do is what to break it down for you to be able to understand everything about what risks to reward. Okay, so if you can hear me or if you are with me, kindly type 1 in the chat box. Let me know whether you are with me. Type in 1 in the chat box. Type in 1 in the chat box. If you can hear me, type 1 in the chat box. Let me know whether you are with me. If you are with me, type in 1 in the chat box. Okay, so Jack Acho is with me. All right. All right. So Daniel Tetevitu is also with me. So type in 1 in the chat box. Okay. Okay. So you guys are with me. So when you talk about, so in today's webinar, we are going to be talking about risk to reward. So leveraging risk to reward ratio for success in the forex market. So a lot of people are not seeing consistency on their account. A lot of people are not able to trade. A lot of people are not able to trade proprietary firm accounts. Okay, a lot of people have been seeing uh, some of the forex gurus trading proprietary firm accounts, and they are wondering how they are able to do it. They are able to do it because of this thing, not because they don't lose trades, not because they know exactly what is about to happen in the forex market, but what is helping them to achieve success in the game is about this topic: risk to reward. So a lot of beginners have been overlooking this thing about risk to reward, risk to reward. A lot of beginners don't even have an idea about how it works. So in this webinar, I'm going to talk about it. I'm going to make it very simple for everyone to understand. So as I've been saying, if you have been getting maybe within a week, if you have been getting like maybe a winning streak and the moment one losing streak enter, everything is wiped away, everything is gone. Then you need to stay to the end of this video, because I'm going to make it very simple for everyone to understand. So as I've been saying, if you have been getting some winning streaks, you have been getting some winning trades, and only one trade wipes everything away because of what, you don't understand this principle of risk to reward, then I think you need to what, stay to the end of this video, because I'm going to make it very simple for everyone to understand. So what is risk to reward? So when you talk about risk to reward, it's simply what, comparing what, your risks, okay, comparing the amount that you are risking on a trade to the returns that you are about to be getting in what, when a trade goes in your favor. Okay, so that's the meaning of risk to reward, comparing the amount you are going to risk on a trade. So when you when you input a trade, how, what is the percentage are you risking on a trade, or how much, when it comes to the monitoring terms, how much are you risking on the trade? Okay, that's the risk, that's the risk aspect. So the risk aspect can be the percentage, it can be in what, in the form of percentage terms, or it can be in the form of what, monitoring terms. So you have to take note of that. It can be in the form of what, percentage. Okay, maybe I'm risking 2% on my account, I'm risking 3% of the account. So when you talk about the percentage, it means that if the trade is moving against you, you are willing to risk, you are willing to lose what, 3% on your account. That's the meaning of what, risk to reward. That's the meaning of risk. Okay, if the trade is moving against you, how much are you willing to what, lose to the market? Okay, so is it going to be in the monitoring terms, or is it going to be in what, the percentage terms? So when it comes to the monitoring terms, how much, so if you're having $100 account, how much are you willing to risk to the market? Or maybe with $100 account, I'm willing to risk like maybe $10, I'm willing to risk what, $100. It's all going to base on what, it's all going to be based on what, your willingness, or the amount of money you can afford to lose. So how much are you willing, or how much can you afford to lose, that you are not going to go back to the village? Okay, or that if you lose that amount of money, if you're having family, your family is going to eat the next day. Or if you're a student, you'll be able to what, you'll be able to feed yourself in the next day, you'll be able to what, pay for your tuition fee in the next day. Okay, so that's why it's always important to be what, don't borrow money to trade, don't borrow money to trade. So when it comes to the risk, it should be an amount of money that you are willing to what, lose to the market. Okay, so anytime that you input a trade, your risk is what, an amount that you are willing to lose. So if the trade goes against you, you are not going to beat yourself up, you are not going to be pissed, you are not going to be pissed off. Okay, so that's the risk portion. So the risk portion, as I said, it can be what, in the form of percentage, or it can be in the form of what, monitoring, the monitoring terms. So you need to take note of that. Anytime you are inputting a trade, you need to ask yourself, are you going to make it, are you going to risk in terms of percentage? You can convert the monitoring terms into percentage, but let me put it this way, are you willing to risk in terms of percentage, or are you willing to risk in terms of what, the monitoring terms? Okay, so with a $100 account, how much are you willing, or how, what's the percentage are you willing to risk on the account? Maybe you are willing to what, risk 2%, you are willing to risk 5%. And one thing that you have to know, or one thing you need to understand, is what, your risk, okay, your risk is going to base on what, your knowledge level in the market. Okay, your skill level in the market. Your risk is going to be based on what, your skill level in the forex market, or in the financial market. So for me, for instance, I risk based on what, my experience level. If I've seen something happening over and over again, if I'm risking, I'm not going to be afraid. If I'm risking, I know anything can happen, the market is unpredictable, the market is a probability game, but I'm willing to risk an amount of money that's what, I mostly risk based on my experience level. I risk on something that's what, I have a lot of experience on. So most of the patterns that I trade, I have a lot of experience on that. So that's why I bet on it. Okay, that's why I put my real money on them, because I've seen it happening. So don't risk an amount of money that you don't have an experience about. You don't have an experience on it. Okay, so the experience that I'm talking about can be what, the pattern that you have seen, you are seeing it happening in the market. You need to make sure the pattern that is happening in the market, you have experience on it. Okay, so that should be your what, your risk. Okay, so when you talk about risk to reward simply means what, comparing the amount you are willing to risk in the forex market to what, your reward you are going to get in returns if the trade goes in your favor. Okay, that's the reward. So when you talk about risk is to reward, it's simply what? Comparing your risks, okay? Comparing the amount you are risking on a trade, or comparing the percentage you are risking on what? Your account, to the reward you are getting on what? The reward you are getting in returns of the trade that you are inputting. So that's what you need to understand. So the reward is going to be in this way. If the trade goes in your favor, if the trade goes according to the way you speculated, according to the way you predicted, how much in terms of money, how much are you going to get in returns? In terms of what? When it comes to, in terms of maybe the percentage, what percentage are you going to get in returns? Okay, so you need to understand that. So risk to reward simply means what? Amount, comparing the amount you are risking on a trade as to what? The reward you are going to what? Get in returns. Okay, so let me use a real life example. So uh supposing maybe you are spending on someone. Supposing maybe you are spending on someone, and I know a lot of people spend, I know a lot of people give, I know a lot of people spend because they want something in returns. So maybe if you are a student and you are paying school fees, and you know at the end of at the end of what? Your education, there was nothing better that you are going to get in returns. Are you willing to what? Pay? Will you be willing to pay school fees, or will you be willing to pay for your tuition? That's impossible. Okay, so always you are expecting always you are expecting your returns that you are going to be getting should be bigger than what? The amount you are paying. Okay, so that's how forex trading too also works. Okay, and if you're a businessman, if you buy something from the market, if you are, maybe you are into buying and selling, if you buy something in the market, if you buy something in the market, are you going to expect to sell it lesser than the amount you bought it in the market? It doesn't work that way. When it happens that way, or when you do it that way, you are going to run at a loss. So you always make sure what? The thing or the product that you are buying from the market, when you are going to sell it, you are going to sell it more than the amount you bought it, or more than, or comparing it to what? The amount you bought it at what? At the wholesale market. So that's how forex also, that's what I'm talking about, to risk to reward. So always you have to make sure the amount you are risking, or when it comes to business, you have to always make sure your capital at the end of the month, or at the end of what, at the end of maybe the year, your returns is going to what? Be bigger than the amount you invested in what? The business. If you are an investor, you always make sure what? Or you are always expecting your investment is going to yield more than the amount you invested in the business, or amount you invested in either the stock market, or either any investment asset that you invested in. So that's how risk reward also works. You are always expecting what? Your reward to be bigger than what? The amount you risk, or your reward is going to be bigger than what? The risk you risk on a particular thing. Okay, so it can either be what? An investment, it can either be what? Your business, or it can either be what? Maybe if you are taking care of your child too, if you are a parent and you are taking care of your child, you are expecting your child to grow up to become a better person in the society, or a better person in the future. And if you knew, maybe someone has prophesied, or you've gotten a dream, or maybe you know that this child that you are taking care of, and then maybe in the future, your child is not going to bear fruit, or is not going to, like, maybe bring something better in returns. Are you going to spend your life savings on the child? It's going to be very difficult if you know exactly how your child future is going to be. It's going to be very hard if you know what? Your child is not going to bring something better in the future. It's going to be very hard for you to take care of. Okay, so that's how forex trading too also works. So anytime you input a trade, you need to make sure what? The amount you are getting in returns, or okay, maybe you need to make sure what? Your returns or your reward is always what? Greater than your risks. Okay, it's very important in forex trading, because if your reward is always lesser than your returns, or your reward is always what? Lesser than your returns, you're always going to be suffering. Okay, you will lose, you are going to be winning, and when one losing trade comes in, it's going to wipe everything again, and you need to start afresh. Meanwhile, there's some of the trades that you took went in your favor, maybe went in your favor very well, but because you were not patient to wait and other stuffs, you are coming back to break even again, or you are coming back to losses again, and you need to start everything afresh. And when it happens like that, you are not going to grow in the industry. You are always going to be back and forth, and it's going to be very difficult for you to grow an account. So you need to understand this principle, and you need to always stay calm. You need to always understand that what for you to be able to be successful in this game, for you to be able to grow an account, you need to understand this principle of what risk to reward. So when you lose a trade, one losing trade is not going to bother you, or one losing trade is not going to depress you for the day. Okay, so you have to always understand this principle. So as I said, risk to reward simply means what? The amount you are risking, or the percentage you are risking on a trade, as compared to the reward or the returns you are getting on what? The trade that you inputted, or the trade that you executed. So you need to understand that. So as I was explaining, it compares the amount of risks you are taking on a trade with the potential reward. Okay, so the forex market is all about what? Predicting and speculating. You get it? It's all about predicting and speculating. So when you talk about risk to reward, it's all about what? The amount you are risking and the potential. So that's hope. Okay, so potential is like hope if you believe. Okay, so the potential reward that you are going to get in case maybe the trade goes in your favor, in case maybe the trade goes according to what you projected or predicted, this is the reward you need to get in returns. Okay, so always the potential reward should be greater than what your potential should be greater than the amount or the percentage you are risking on a trade. So you need to understand that. Okay, you need to understand that. So if you are not implementing this principle, it's going to be very hard for you to see consistency in your trading journey. Okay, it's going to be very hard for you to see consistency. So if you are struggling to make if you are struggling to make forex work for you, it's because you are not implementing this principle. And a lot of people are overlooking it because of what? The dollar value they are seeing on the trade, because of what? The amount of money they are seeing on what? The dollar they are seeing on the MetaTrader 5. It makes them what? Act impulsively to close the trade prematurely. They close the trade whilst it has not gotten to the potential. So you need to always make sure the trade is getting to the potential. So if you're a beginner, this is how risk reward it's normally quoted. So the R simply means what? Your risk, and the this R also means what? Your reward. So risk is to reward. Okay, so it simply means what? Comparing your risk to the reward. In case maybe you are executing a trade or you are inputting a trade, or okay, if you are inputting a trade, your risk and what? As in, if the trade is moving in your favor, of or maybe what you are expecting from the trade to happen, so that's going to be your reward. Okay, so we are going to be seeing example like 1:3. So one simply means what? The reward. Sorry, the one is simply what? The risk. This the risk you are risking on a trade. Okay, so the one stands as what? Your risk, and the three is what? The reward. Okay, so with this one that has been quoted over here, it simply means what? For every $1, in case maybe in monetary terms, every $1 you risk, you aim to make $3 in profit. Okay, so this is what? Self-explanatory. So risk is to reward. Okay, we having an example over here. We having 1:3. It means what? For every $1 you risk, you aim to make what? $3 in profit, or $3 in returns. Okay, or $3 in what? As in your gains. If the trade goes in your favor, this is what? The returns you are going to get. So you see, with only one return, with only $1 you risk on the trade, you are getting in returns what? $3 in profit. Okay, so that's the meaning of what? Risk is to reward. So sometimes you can get 1:2. So 1:2 simply means what? For every $1 you risk on a trade, in returns you are going to be getting what? In returns you are going to be getting what? Two. Okay, so maybe if you risk $1, you are going to get in returns two. So if you have 1:4, it simply means what? For every $1 you are going to get in returns four. For if you risk like five, for every $1 you are going to get in returns five. Okay, so you need to understand this principle. So the one stands as what? Your risk. Okay, so it's like leverage. So normally when you go to your broker's platform, the leverage, this is how they are being quoted, or this is how they are mostly written. So we mostly see 1:100, 1:500, 1:200. So the one stands as what? Your capital. So it's the same thing over here. The one always stands as what? The one always stand as what? Your risk. Okay, so if you execute a trade, maybe with this trade I'm willing to what? lose $20. Okay, so the stop loss, you need to understand that the stop loss that you normally play, the stop loss that you normally place stands as your risk. So if the trade is going against you, the pip range for your stop loss stands as what? Your risk. So if the trade is moving against me, this is the amount I'm willing to risk. So the one stands as what? Your risk. Okay, so I'm willing to risk like $200. I'm willing to risk like 2%. I'm willing to risk like $300. This is your risk, and you have to make sure in returns it should be more than, at least, even if it is insignificant, at the end of the with a series of trade, you can make some money from, or you can make a good returns from what? The trade that you've been executing. So you need to understand that always your risk to reward should be greater than what? Your risk, or your reward should be greater than what? Your risk. Okay, you need to understand that. So why is risk to reward, or why is what RR critical for forex success? So for you, so those that you have been seeing them making a lot of money in the forex market, let me tell you, it doesn't mean they are not losing. Okay, it doesn't mean they are not losing, but the reason why for you, you are not seeing consistency, the reason why for you, you are not seeing good returns, the reason why you are not seeing good returns on your trade. So the forex, the person who is making a lot of money from forex, doesn't mean the person doesn't lose trade. You get it? You need to understand that no one in the forex market doesn't lose a trade. So last time on my live stream, I explained one important topic over there. I explained that even investors, those who invest in the stock market, those who invest in what, even if you buy lands and those stuffs, there are risks attached to that. Okay, there are risks attached to that. So in the forex market, one thing is what, the forex market is a high risk industry. Okay, but anything that is risky, the returns, you need to know that the returns is going to be what? Bigger. That's what you need to understand. So as I'm saying, those that you see them on the those that you see, the big forex traders that you see them, those who are making fortune from forex trading, one thing you need to understand is that they mostly lose in their trades. That's what you need to understand. There's no way they don't lose trades. No one in the industry doesn't lose trade. And even if you are investing in stock market, sometimes you are going to lose. If you invest in crypto market, you are going to lose. So when it comes to trading and investing, you cannot get rid of losses. Okay, you cannot get rid of losses when it comes to. So if you are in this trade, if you are in this industry and you think everything is going to be rosary, everything is going to go perfect every day, you are going to be happy every day, you are going to smile every day, that means you are at the wrong side of the industry, or maybe you are the wrong side. Okay, you are the wrong side. This is not for you, because when it comes to trading and investing, there's no way you can go without losing. You are going to lose. Okay, the market is not going to go in your favor every day, because this market is a decentralized market. Okay, people are bringing in orders from different parts of the world, so you don't know what the person who is going to move the exchange rate is going to do. Okay, maybe the person wake up early morning and he got paced by what, or he got paced by his wife, or her wife, his wife. Okay, so you have to understand that the market is a decentralized market, and there's no way you are going to what, there's no way you are going to trade the market, or there's no way you are going to invest without losing. If you don't want to lose, if you don't want to be experiencing losses, then you need to go and invest in treasury bills. You need to go and invest in fixed deposit. With that one, your money is what, guaranteed. You are going to get some return, but you need to understand that those returns can't help you to build fortunes. Okay, those returns can't help you to be millionaire. Those returns can't help you to be what, rich. So anything that is risky, the returns is what, is very high. And anything that is what, very anything that is less risky, you need to understand that the returns too is not all that big. So in the forex market, the forex market is risky. The financial market, trading the financial market, crypto trading, stock trading, they are all risky. But one thing is what, the reward is what, it's very big. Okay, if you understand how the game is being played. So I'm showing you how the game is being played. This is how the game is being played. So those who are making money, they have understanding about this, their understanding towards what, the game. You need to what, understand risk to reward. If you lose, if you get a winning trade, what returns do you get? Okay, what is your return do you normally get from the winning trade? That's how the game is being played. So it is very important topic that you don't need to overlook. And I know a lot of people are always, a lot of beginners and struggling traders, their concentration or their focus is only about what? The strategy. Forex trading is not trading the financial market is not only about strategy. You need to understand that trading the financial market is not only about strategy. Okay, it comprises of a lot of things. The psychology part, the mindset, your mindset need to be right. You need to understand the risk to reward. Strategy is secondary. Okay, strategy is even though important, but if you don't understand the principle of risk to reward, if you don't understand psychology, then you are going to be losing. You are going to get the right strategy, you'll be getting some trades, but when it comes to long-term success in this game, you need to make sure you understand what the risk reward part and what your risk management part and your mindset. You need to understand the mindset. Those succeeding, their mindset that they are having towards this trade, they are having towards this game. Okay, so as I'm saying, you are going to lose no matter what. So losses are part of the game. Losses are part of what how the game is being played. So it is very critical. So the market can be unpredictable. So as I explained, the forex market is an unpredictable, specifically with the financial market, but we are dealing with what? The forex market. So specifically, the forex market is an unpredictable. It's a game of probability. Okay, so those who are justifying or those who are concluding on only one trade to justify their performance, that's not how the game is being played. The game is you justify your performance on a series of trades. Okay, so you take like maybe 50 trades, you take like 20 trades to measure your performance. You don't measure your performance based on losing only one trade. You don't measure your performance based on only single trade. You measure your performance based on what? A series of trades. You get it? A series of trades. That's how you are going to measure your performance. So if you lose a trade today and you just conclude that your strategy is not working, then you are not getting the way the game is being played. You need to understand that for you to be able to be successful in this game, or for you to justify, or for you to conclude on a strategy, you need to what? Measure it with a series of trades. So as I explained, you need to measure even 20 trades is lesser. Okay, if you are measuring your performance, only 20 trades is lesser. You need to measure it with what? A series of trades, like maybe 30 trades, 40 trades, 50 trades, before you conclude the strategy doesn't work. So the forex market is unpredictable, but the only way you are going to come out successfully is what? When you are taking a series of trades. Okay, so when you talk about sequence, one thing you need to understand is what? You don't know when a probability is going to be in your favor. You can be having consistent losing trades, like you can be having consistent losing trade like 3 in a row. Okay, that doesn't mean what? You are not going to be successful in the trade. As I said, when it comes to series of trade, or when it comes to measuring probability, or when it comes to probability, it is measured by a series of trades. Okay, so when it comes to the series, you don't know exactly when the wins are going to be in your favor. So you can be having, so let me do an example over here for you to get what I'm talking about. So tomorrow you might be getting a trade on GBP USD according to how the market is forming. So this is how it works. Okay, so maybe one, so let's say 10 trades, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so this is how it's being played. So maybe the wins can start from here, the losses can start 1, 2, 3, 4. So maybe the losses can start at the beginning. You get it? Maybe the losses can start at the beginning. You can be having loss, you get it, or L. You can be having 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 L. You get it? So you can sometimes you can be having three hot L in what against you. You can be losing 3 times in a row, but that doesn't mean your strategy doesn't work. So you need to have the number of you need to understand the quantity that you are going to measure your performance. So maybe your performance, you are going to be taking 20 trades. Until the 20 trades, you've taken the 20 trades, don't conclude or don't justify your strategy. That's what I want you to understand. Until you've taken the 20 trades, you don't have to justify your performance, or you don't have to conclude on your performance, or you don't have to conclude on the strategy. Okay, so the series can start with what? Losing, losing, losing. But that doesn't mean the strategy doesn't work. That's what you need to understand. Okay, that doesn't mean the strategy doesn't work. It can also come with what? Another L. Since the quantity of trades that you are taking hasn't ended, don't justify your performance on these ones. Okay, so the winning streak can start. You can have W. You can start with W. The wins too can continue. You get it? The wins too can continue. The wins too can continue. You get it? Your wins too can continue. But since you understand how the game is being played, since you understand that what in this game, for you to become successfully, you need to understand risk to reward. So the wins that you are getting is always greater than what your reward. So the losses are one, the losses are one, the losses are one. But when it comes to the win is sometimes it can be 1 to 5, it can be 1 to 2, it can be 1 to 3, based on the market condition. Okay, so I'll talk about those who are fixated on the risk to reward. Some people are fixated, for every trade they have to get 1 to 3, for every trade they have to get 1 to 4. Risk to reward varies based on the condition of the market, based on how the market is presenting itself. You get it? So risk to reward, I'm not going to say you need to always focus on 1 to 3, you need to focus on only 1 to 2. Sometimes a good opportunity will present itself, but because the market condition is giving you only 1 to 5, doesn't mean you don't have to take the trade. Since the reward is always good, since the reward that you're having on the trade is greater than the risk, I'm not going to tell you you shouldn't take the trade. You need to take it. Okay, you need to take it, unless maybe you are going to be reserved and always be waiting for what? 1 to 3, 1 to 3, 1 to 3 risk to reward trades. That's fine. But when it comes to the market, you can't predict it. The market is not always going to give you 1 to 3 risk to reward. The market is not always going to give you 1 to 4 risk to reward. You need to understand that when it comes to the market, it's about what the market condition, what the market is presenting to you. Okay, that's what you are going to base on it, to make your justification or to make your conclusion on your risk to reward. So I'm not going to conclude that you have to always focus on 1 to 3 risk to reward. It doesn't work that way. The market presents what it needs to present to you. You get it? So that's what you need to understand. Okay, so as I'm saying, it's all about what? A series of trades. So when it talks about, or when it comes to the series, the series can be what? Losses can come at the beginning, but that doesn't mean you are a failure. Losses, you can have like 4 losses in a row. If you are measuring if the quantity of trades that you are taking is 10, you can have 4 losses in a row, and what the rest is going to be wins. You can have 5 losses in a row and the rest is going to be win. The wins can start. You can be having what at the initial point. You can be having W. You can be having wins. You can be having like 5 wins in a row, and the rest can follow with what? Losses. So when it comes to probability, you don't know when the probability is going to be in your favor. So you need to understand that for you to be successful in this game, you have to what? Play it with what? A series of trade. And probability is what? You don't know when probability is going to be in your favor always. So that's what you need to understand about the game. You don't know when exactly probability is going to be in your favor. Okay, so you need to understand it. So the market is what? As I was saying, the market is what? Unpredictable. So you need to understand that. So the market is what? Unpredictable. So the reason why we use risk to reward is because what? The market is unpredictable. Okay, the market is unpredictable. That's why we are always what? We are always emphasizing on what? Risk to reward. So but a good risk to reward strategy ensures that the rewards from your winning trades outweighs your losses. So you need to always understand that your wins are always going to be what? Greater than your reward. So anytime that you are inputting a trade, even 1 is to 2, if you are risking 1 and to get 1.2, it's better. Okay, it's even better according to your strategy. If you're having a high win rate, it is better. Even if you're having is to 1.1. At the end of the day, if you take like 6 trades, you are still going to be profitable. Okay, if you lose like 4 or 6 in a row, you are still going to be profitable. So far as what your reward is always greater than your risk, you are still going to be profitable. So those who have been watching me on the live stream, sometimes I will get a nice trade setup, but because the reward is lesser than when the trade is moving against me, that's going to be my risk. I always avoid those trades. Okay, I know it's not worth it for me to trade. So you need to understand, or you need to always pay attention to that. So the reason why you are not seeing consistency is because you don't understand this principle. This is how the game is being played. Risk to reward is always what the hidden truth or the hidden secret in this game. Risk to reward. So you have to always make sure your risk is always, your reward is always what greater than your risk, and you don't need to win every trade. So this one problem that most beginners are facing. The moment they lose a trade, they just conclude the thing doesn't work. This thing doesn't work. Someone told me, this person told me, Nima told me this thing is not going to end me anywhere, and they start giving up. That's not how the game is being played. One losing trade doesn't mean you are not going to be making money in the game. Okay, so you need to always stay calm, learn from your mistakes, and move on. That's how the game is being played. You need to what always stay calm. But the reason why a lot of people are getting frustrated, a lot of beginners come into this game and they think always the game is going to go in their favor. And a lot of people are doing the 9 to 5. And with 9 to 5, you know, at the end of the month, no matter what, you are going to get this fixed amount of salary. You are going to get this amount of salary. You are going to get this fixed amount of salary. So you think like trading too is like that. Trading is not like that. You get it? Trading is not like that. So one thing you need to understand is that trading, you are going to be losing trades. So you don't need to win every trade for you to make a lot of money in the market. So with a good risk to reward, you will lose some trades, but you will still come out profitably. Okay, you will lose some trades, but you still come out profitably. So you don't need to win every trade. So don't get frustrated when one loss goes in your favor. The reason why you normally get frustrated is because what, you don't have a trading plan. Okay, you don't plan on your trade, you just execute with any loss size you want. That's why you are not seeing growth on your account. You get it? You don't That's why you don't see growth on your account. So you need to understand is what one thing you need to understand is what you need to what you need to one thing you need to understand is what you need one thing you need to understand is what one thing you need to understand is what you don't have to win every trade for you to be successful in this game. That's what you need to understand. You don't have to win every trade. You don't have to win every trade for you to be successful, for you to make a lot of money from the forex market. Sometimes some trades will go in your favor, other times too you will lose. But the only thing you are going to come out, the only thing that is going to help you to be successful in this game is what, when you understand risk to reward. So one, the market is unpredictable. You are not going to win every trade. And you need what? So risk to reward is always going to protect your capital. If you understand that this is the amount of money I'm risking on this trade, this is the risk percentage I'm risking on this trade, you are not going to be adjusting your stop loss. You are not going to be shifting your stop loss if the market is hoping the market is going to reverse. So you will start shifting your stop loss. You start shifting your stop loss. One thing you need to understand that when you start shifting your stop loss, the market is going to go against you. It's going to go against you. Okay, and if the market goes against you, you are going to what? You are going to spoil your risk to reward. You get it? You are going to spoil your risk to reward ratio. So you need to understand that you have to always make sure your risk to reward, your stop loss, your stop loss price, or where you place your stop loss is going to remain the same. Okay, it's always going to remain the same. You are not going to shift it. You are not going to be moving it around, because if you move it around, it's going to affect the way it's going to affect your risk to reward. Okay, and at long run, it's going to affect your account growth, how your account is going to what to grow. It's going to affect it. So you have to always understand that the moment you place the trade, the moment you set your stop loss, you set your take profit, it's going to remain. You are not going to be moving it. You are not going to be adjusting it. Okay, you are not going to adjust it. So the reason why it's always important, the reason why you focus on risk to reward, we understand that the market is unpredictable. We understand that we don't need to win every trade for us to be successful in this game. We are not going to be adjusting our stop loss for it to affect our risk to reward. Okay, I hope you guys are understanding what I'm talking about. I hope you guys understand. So this is how I'm going to teach you. So if you are getting this, type in one in the chat box. Type in one if you are getting what I'm saying. Type in one in the chat box. Type in one in the chat box. Let me know if you are getting whatever I'm saying. Type in one in the chat box. Type in one in the chat box if you can. If you are getting what I'm saying. Type in one in the chat box. Type in one in the chat box. If you are getting what I'm saying, type in one in the chat box. Okay. All right. So Joseph said he's getting it. Type in one in the chat box if you are getting what I'm saying. Type in one in the chat box. All right, so let's talk about the math behind the risk to reward. How you be able to calculate your risk to reward. So for you to calculate risk to reward, one thing you need to understand about this market, one thing you need to understand is what you need to understand your strategy. A lot of people don't understand their strategy. So when for me, for instance, I really understand my strategy. I really understand the frequency of times I get a trade. I really understand the risk to reward of my trades. Okay, so you need to always understand your strategy. Okay, so this market is not for joke. This thing that we are doing is not, it's not a it's not for jokes. Okay, we are not playing, so you need to take it serious. Forex is a business. Okay, and I know a lot of people are starting the week as the upcoming week. You don't have any plan. The moment you see a trade, you just execute it. You don't have any the amount of money you have to risk on the trade. How can you be successful in this game if you are not having a plan? Okay, so a lot of people are going to give up on this game because they don't have a plan. You need to have a plan. The upcoming week is about to come. You need to look at your account. So this is the account size. So how much or what's the percentage am I going to risk on every trade that I'm going to execute? You don't have to be doing things randomly and expecting good returns on this game. You need to understand. So as you're about to start a new week, what's the percentage am I going to risk on a trade? Every single trade, what's the percentage am I going to risk? You need to understand this principle in order for you to be successful in this game. But if you don't understand this principle, it's going to be very difficult. A lot of people are going to be doing things randomly for the week, the upcoming week, and if you don't make money in the in the week that you're about to start, you start complaining, you start blaming the thing doesn't work. You need to understand the amount you are risking on the trade. You need to understand the percentage you are going to be risking on the trade so that you are going to be seeing consistency on your account. Okay, you are going to be seeing consistency on the account. So you need to determine the number of trades. Okay, so let's say maybe I'm not going to use a bigger risk to reward. So they said you need to determine the number of trades. So maybe you are going to be taking 10 trades. Okay, and you are going to be focusing on only one. I'm not going to be focusing on a bigger risk to reward. I'm going to focus on only 1:1.5, and let's see, 1:1.5 risk to reward. Okay, so let's say the one is going to be our risk. The one is going to be our risk. Okay, the one is going to be our risk, and the 1.5 is going to be our returns. So for every single trade, for every one trade your risk, this is going to be our returns. So the returns is going to be what? The returns is going to be 1.5. Okay, so this is the reward or returns. So the reward is going to be 1.5. You get it? That is the reward. Okay, so I said you are going to take 10 trades. Okay, so you need to understand your win rate too. You need to understand based on what? Your historical data. You need to understand your what? Based on historical data, you need to understand your winning rate. So for me, for instance, I have a high win rate. Okay, based on the pair that I'm trading, I have a high win rate. So you need to understand all these things. Okay, you need to understand all these things. So I have a high win rate. So let's say maybe with the 10 trades, I'm only going to win 5, or even I'm going to win only 4, and I'm going to lose 6. Okay, so let's say maybe the first trade I lost. Okay, the first trade. So this is the risk. This is the risk. This is the risk, and this is the what? The reward. This is the reward. I'm going to win only 4 trades. Okay, I'm going to win only 4 trades. I'm going to be winning only. So let's say maybe the first 4 trades, or maybe the first 6 trades I lost. So I was losing one, I was losing one, I was losing one, I was losing one. So I lost like 6 in a row. Okay, and I'm winning only what? I'm winning only 4 trades. So the 4 trades that I'm winning, I'm getting 1.5 in returns. Okay, so the reward is 1.5, 1.5. Sorry, I'm getting 1.5 in returns. Let's see at the end of this thing how much, or how what's the returns I'm going to get. Maybe 1.5, 1.5, 1.5. So I'm going to win only 4 trades, and I've lost like 6 trades on in a row. Okay, so this 6, 5. So 1, 2, 3, 4, 5. So in total, my risk is going to be what? 6, right? My risk is going to be 6. My risk is going to be 6, and my reward is going to be what? My reward is going to be, so 1.5 is going to be 1, 2, 3, 4. So it's going to be what? 4 plus 5, 6. So at the end of what? At the end of the 10 trades, I'm going to what? Break even. You get it? I'm not losing, I'm not winning. You get it? But I won only what? 4 trades, and I lost only what? 6 trades. And now I'm coming out successfully. I'm coming out with what? I'm coming out what? To break even. You get it? So imagine if I having a high win rate, and I'm winning like maybe 6 in a row. At the end of the month, I'm coming out successfully with even the risk reward is not all that big. It's only, I didn't concentrate on only 1 to 2, as people are saying you have to concentrate on only 1 to 3. So with 1.5, we are still coming out at what? A break even. If you lose like what? 6 trades in a row. Okay, and if you win trades in a row, you are going to be profitable. If you win 7 trades in a row, you are going to be profitable. So you need to understand the risk reward, so that you are not going to be pissed off. You are not going to get annoyed if you lose a trade. You need to understand that how the game is being played is what? All about risk to reward. Okay, it's all about risk to reward. So if you took only 10 trades, I took, let's say I'm taking like 7, I'm losing like 5, and I'm winning 5. At the end of the month, or at the end of the 10 trades, at the end of the series of the 10 trades, I'm going to come out profitably. I'm going to be what? Successful in the game. So that's how the game is being played. So you need to understand that risk reward is what? Is the secret way to become successful in what? How this game is being played, or to be successful in what? Trading the forex market. Okay, risk reward is very, very important. So as I said, you need to first of all understand your strategy. If you don't understand your strategy, it's going to be very difficult for you to come. You need to understand your frequency of trades. You need to understand your win rates. Okay, and you need to understand the times that your trades normally happens or occurs. That's the frequency of trades. Okay, so within a week, how many trades do you get within a week? Within maybe a month, how many trades? So that when you are apportioning your risks on every trade, you will know exactly how you are going to be apportioning your risks. So if someone who is a scalper, someone who takes a trade, who takes like 4 trades, the way the person is going to risk on a trade is not going to be the same thing as how someone who is only taking 1 trade within a week, or maybe 2 trades, or 1 trade within the 2 weeks, is going to be different from that person. So you need to understand the number of times, the frequency of times your trades happen, so that you will apportion it accordingly. Okay, so you need to plan your trade. You need to plan to become successful in this game. If you don't plan, you are taking things randomly, it's going to be very hard. And then I know a lot of people are not doing it. They are not treating it as a business. You need to treat it as a business. With your account, you need to see your account as a trading capital. The account that you are trading, you need to see it as what? your business, something like a business capital. You don't do things randomly in a business and expect successful returns in your business. It's the same thing in trading. Your account, some people have just funded accounts for fun. I just want to trade for fun. They don't have any plan guiding it. Okay, they don't have any plan guiding it. So you need to have a plan for every trade. How much or what percentage am I going to risk? Okay, you need to understand the frequency of time you are going to risk on the trade. So there are a lot of things that goes into the how to be able to what do your mathematics, or how to able to what to plan your trade. But in this webinar, we are not going to be talking about how to be able to plan your trade and those things. I'm talking about the risk to reward. Okay, so before you enter a trade, make sure the potential reward outweighs the risk. Okay, you need to always make sure the reward is always what outweighs the risk. Okay, so mistakes to avoid when using risk to reward. So a lot of people too also understand risk to reward, but they don't understand this principle, these things. Okay, a lot of people don't understand what I'm going to talk about. So you don't have to be moving your stop loss when trade is going against you. A lot of people understand risk to reward, especially the struggling traders. They understand risk to reward, but they don't understand, they are doing some mistakes that is causing them a lot. So when you are in a trade, if you have planned your trade, because the stop loss that you are placing, the pip range, okay, for your stop loss is a monitoring, what is a monitoring, it's in terms of you have measured it in what, in the monitoring terms. Okay, maybe if you are risking like maybe $20 on a trade, you need to understand that if you adjust your stop loss, it is going to affect your account. Okay, if you adjust your stop loss, one thing you need to understand that what, it is going to affect your stop loss. So you need to always pay attention to that. Don't be moving your stop loss when the trade is moving against you. Some people go to the extent that they even remove the stop loss from there, okay, hoping the trade is going to reverse, and they will later blow the account. So if you place your stop loss, so maybe if I've placed a stop loss over here, if I've placed a stop loss, if I'm taking a buy and I've placed a stop loss over here, and the trade is coming against me, I don't have to be removing the stop loss thinking the trade will later what, reverse and move in my favor. That's not how the game is being played. One thing you need to understand, that if you place a stop loss over here, you have factored it in your account. So if you adjust it, it is going to affect your risk to reward. Okay, and there's no hope that this trade that is moving down is going to reverse. Okay, so if you have been doing that, even though if you have been applying risk management and you have been removing your stop loss, it is going to affect your account. So you have to always pay attention that your risk to reward, your stop loss is going to always remain the place that you place it, where you place it at the initial stage. You are not going to be moving it around. Okay, you are not going to be moving it around. Always leave it. If it is going to hit it, let it hit it. Don't move it around. You get it? Okay, so you need to understand that principle and let your winning trades run. Ensure what, your trade reach their full potential. A lot of people too don't understand. They don't normally use what, they don't normally allow the trade to get to its potential. They get scared when the trade is moving into their, when the trade has moved and it hasn't gotten to the target, and the trade starts retracing, they start adjusting, they start closing the trade prematurely. One thing you need to understand, that this is a competition among buyers and sellers, and there's no way the market is going to move straight forward in one direction every time. The market doesn't move straight forward every day or every time. The market doesn't move straight forward. One thing you need to understand, that what, the market moves up and down. The market moves up and down, and at certain point, if it is moving, you get some what, minor retracement, or you get some minor pullback. It is part of the game. It's what, if you have your stop loss, if you have your take profit, don't what, pay attention to the minor pullbacks. It is part of the game. Though if it is buying at certain point in the trade, buyers are going to also come into the market and what, try to pull it to their direction. But that's what, the short-term view. But when you focus on the broader view, or when you focus on the higher time frame, this thing is just a minor pullback and the market is going to what, move in your direction. So one thing you need to understand, that when the trade hasn't got your potential take profit, allow it. Okay, don't be adjusting, don't be closing partials and those stuff. It is going to affect your risk reward. Okay, and as I said, risk reward is the only way you are going to become successful in this game, because one thing is what, the market doesn't move in a straight line. The market is not going to move in your favor always. You get it? The market is not going to move in your favor always. So you have to always understand that what, you need to always understand, you are going to allow your take profit to always get to its potential. Okay, the market is going to get to the take profit at its potential. Okay, so don't be adjusting or moving. So you need to understand your strategy, and the reason is what, a lot of people don't know how to place a take profit. That's why they normally get scared. They don't understand where to place stop take profit, where to place stop loss. So they normally get scared and those stuff. So you need to understand, you need to get a skill, you need to get the knowledge for you to be able to trade successfully. So know where, before you input a trade, understand where you are going to place your stop loss, understand where you are going to place your TP. You get it? Your take profit. Always know where you are going to place your take profit. If it hasn't gotten to your take profit, allow the trade to what, play out. Don't be moving your stop loss, don't be moving your take profit, don't be closing partials thinking maybe the trade is going to go against you and you are going to lose the small profit that you've gotten in the market. Always allow it to what, play out. You get it? So today's webinar is not for me to show you how to place take profit and those stuff. That one will be another topic for a different day. But today I'm talking about what, risk to reward. Okay, I'm talking about risk to reward. So over leveraging. So one problem, or one thing a lot of people, especially those who are experienced in the game, if they see a setup, or if they see a pattern, okay, that they've seen it happening over and over again, if it repeats itself, they start risking more than what they plan of. That's how the market. One thing is what, the patterns are the same but the outcomes are different. That's what you need to understand. The pattern are the same but the outcome is different. That's how the game works. The patterns are the same but the outcome are different. Okay, so I'll be taking a trade and I'll be winning today. The next day I'll take the same thing and I will lose. Okay, but that doesn't mean I'm a failure, or that doesn't mean my strategy doesn't work. You need to understand that sometimes the patterns are going to be the same but what, the outcome is different. Okay, the outcome is different. So as I said, in the game, it's all, you measure your performance based on what, a series of trades. You measure your performance based on a series of trades. So don't over leverage, don't risk the whole of your account on one particular trade, thinking it's what, you got the signal from someone who has been able to buy Lamborghini, you got a signal from someone who has been able to buy a mansion. That's not how the game is being played. You need to understand that the patterns are going to be the same, but when it comes to the outcome, it's always going to vary. So you are going to manage risks, you are going to keep your risks at the same. Okay, you are going to keep your risks the same as what, as you plan. You are not going to be risking too much on your account, thinking this trade is going to move in your favor, it is going to move in your favor no matter what. It doesn't work that way. So you have to always understand that, the risk, that your predetermined risk is going to be the same in all the trades that you are going to be taking. Okay, so until you are done taking the trades, you are not going to be what, you are not going to be adjusting your risks, you are not going to be massaging your risks. That's what you need to understand. Okay, so one problem that is also affecting some people is what, when they lose a trade today, when they lose tomorrow, they start reducing their risks. You don't have to play the game, you don't have to play it that way. You need to keep your risks at the same. If you want to grow an account, you need to keep your risks the same no matter the losses, unless you've exhausted, or unless you have exhausted what, the risks, you have exhausted the account. Because any account that you deposit, you are going to be having a risk management rule. So this is the number of times I want to this is the number of times I want to what, be trading the account. You'll be having all these things in mind. Okay, so unless you have exhausted the account, unless you have exhausted the account before you start what, massaging, or you start changing your risks. But if you have not exhausted your account, you are going to be keeping the risks the same. Okay, so this is what I have for you tonight. So one thing you have to take, if you are not taking anything, if you have not written anything down, one thing that you need to what take note of is what the market is all about. What It's a probability game, and the patterns are going to be the same, but one thing you need to know is what the outcome is going to be different. The market is a probability game, the pattern are going to be the same, but the outcome is different. So always prioritize risk to reward. Always you need to prioritize risk to reward for you to be able to come out successfully in this game. Okay, so if you have not given a like on the stream, kindly give a like. If you have not subscribed to the channel, kindly subscribe to the channel. If you have any question, kindly drop it in the chat box. If you have any question, kindly drop it in the chat box. If you have any question, kindly drop it in the chat box. If you have any question, kindly drop it in the chat box. Kindly drop your questions in the chat box. Let me address them. Kindly drop your questions in the chat box. Let me address them. Kindly drop your questions in the chat box. Let me address them. Kindly drop your questions in the chat box. Let me address them on the presentation that I made. If you're having any question, if you are confused on anything, kindly drop your question in the chat box. Okay, so I've been getting a lot of messages from people. So kindly drop your questions in the chat box. Kindly drop your questions in the chat box if you have any question. Kindly drop your questions in the chat box. So those if you want to join my private group, or if you want to join my signal group, okay, you need to use, so I've sent a broker link in the chat box. Use that broker link, register with it, find your account, and just send me a message that you've registered with it and you funded your account. I'll add you to my signal group, my private signal group. Okay, I'll add you to my private signal group. So I've provided, or I've sent the link in the chat box. So click on the link, register, and send me a WhatsApp message and just tell me you've registered, and I'll add you to my signal group. So if you are not able to even join the live streams, you can be able to be what taking the signals that I'll be sharing. Okay, I'll be sharing the signals, I'll be sending the signals in the Telegram channel. So kindly click on the link. And when one thing you have to notice, when you use the link, you are going to get 100% bonus. So if you find your account $100, you are going to get $200 in returns. If you find your account $200, you are going to get, so it's going to be like $400. If you find your account 300, you are going to get 100% bonus for Ghanaians. Okay, and with the other country, you are going to get like 50%, but for Ghanaians, you are going to get 100% bonus. Will know when you teach on how to analyze the market. So with the market, I analyze it every day. So you can be joining me every morning. We do live session every day. We trade live, so you can be, or you have to join my mentorship group. You can join my mentorship group. We would like to know when you are teaching how to analyze the market. So with the market analysis, you need to join my mentorship group. Or if you don't have money to afford, then you have to stay tuned for to join the morning sessions. So as I said, if you want to join my private group, use the link. This is the broker that I use. So this is the link that has been given. Use the link to register, and we're going to be part of the private group. So this is the link that I this is the link to the broker I use. So those who don't have a broker account, use that link, register, and be part of what? My private signal group. Okay, you'll be part of my private signal group. I'm going to be giving signals for free. So unless maybe you have funded your account, you use the link that I've given, you fund your account, and what, you'll be able to join. All right, so if there was no question, I think we are going to be meeting tomorrow. Okay, the same time for we are going to be meeting tomorrow. We are going to be meeting tomorrow. So any question? So tomorrow is Monday. We need to make money this week. We need to make money this week. We need to make money this week. So if you have a question, you can drop it in the chat box. If you have a question, you can drop it in the chat box. We need to make money for the upcoming week. When you stop out, will it affect your account? When you stop out, will it affect your account? What does it mean? When you stop out? When you stop out, I don't understand your question. When you stop out, will it affect your account? I don't understand. When you stop, when you get stopped out, that means you are losing the trade, so you are going to lose money. So in forex market, it is money that we use to play. So if you lose a trade, it is money that you are losing. So that's what you need to understand. It is money that is being used to play the game. You get it? It is money that is being used to play the game. So if you get stopped out, that means the trade has the trade has hit your stop loss. So you are going to lose a trade. If you lose a trade, you are losing money. That's what you need to understand. If you lose a trade, you are losing money. So if you get stopped out, that means you are losing money. So that's what you need to understand about the game. If you get stopped out, that means you are losing money. Any question? All right. So if there's no question, then see you tomorrow at the learning session. All right. Have a good night to everyone.